Strategy Inc. moved 11.6% today, and the people who don't understand why are going to make the same mistake next time it happens. Here is the specific thing. MSTR is not a Bitcoin ETF. It is not a tech company, and it is not a normal stock. It is a leveraged bet on Bitcoin adoption structured as a publicly traded vehicle. And that structure creates price mechanics that almost nobody explains correctly. So the question you need answered before you touch this stock, short it, or even form an opinion on it is this. What exactly caused today's 12% move, and is the logic behind that move actually sound? Let's start with the specific catalyst, because vague answers here cost people real money. As of July 1st, 2026, Strategy Inc., the company formerly known as MicroStrategy, holds approximately 580,000 Bitcoin on its balance sheet, making it the single largest corporate holder of Bitcoin on the planet by a significant margin. That number is not static. The company has been continuously acquiring Bitcoin through a combination of convertible note issuances, at-the-market equity offerings, and operating cash flow, and markets reprice that exposure aggressively when Bitcoin itself makes a sharp directional move. Today, Bitcoin pushed through a key resistance level that had been acting as a ceiling for approximately 6 weeks. When an asset that represents the overwhelming majority of your enterprise value breaks out, the equity that is structurally leveraged to that asset does not move one for one, it moves at a multiple. That multiple is the beta. MSTR has historically demonstrated a beta to Bitcoin of roughly 1.5 to 2.0 on strong upside days, meaning an 8% Bitcoin move can translate into a 12 to 16% MSTR move. Today's 11.6% print is entirely consistent with that historical relationship, given the underlying Bitcoin move. The actionable insight here is this. If you see MSTR move sharply and you do not first look at Bitcoin's intraday chart, you are analyzing the wrong variable. The stock is downstream of the asset. Always start there. Here is where it gets genuinely interesting and where most retail analysis goes completely wrong. MSTR does not trade at the value of its Bitcoin. It trades at a premium to its Bitcoin, and understanding why that premium exists, and when it is rational, is the entire analytical game with this stock. The concept is called MNAV, or multiple of net asset value. At various points in 2026, MSTR has traded at an MNAV of 1.4 to 2.0, meaning the market is willing to pay 1.40 to 2.0 for every 1.0 of Bitcoin the company actually holds. That sounds irrational on the surface. Why would anyone pay a premium for indirect Bitcoin exposure when you can buy Bitcoin directly through a spot ETF? The answer has 3 parts. First, MSTR operates inside traditional equity market infrastructure, which means pension funds, 401k plans, and institutional mandates that cannot hold crypto directly can access Bitcoin exposure through a stock. That structural demand is real, and it does not disappear. Second, the company's ongoing Bitcoin acquisition strategy, funded by cheap debt and equity, is itself a value creation mechanism if Bitcoin appreciates. Every convertible note issued at a favorable rate and deployed into Bitcoin is a levered bet that has positive expected value in a rising Bitcoin environment. Third, there is a momentum and narrative component. MSTR has become a benchmark for corporate Bitcoin strategy, and that brand carries a speculative premium the market is willing to assign. The critical caveat, and do not skip this because it is where the risk lives, that premium compresses violently when Bitcoin sells off. A 20% Bitcoin drawdown on a 1.8x MNAV stock does not give you a 20% loss. It can give you a 35 to 40% loss, as both the underlying asset falls and the premium contracts simultaneously. This is not financial advice, but that math is what risk management actually looks like when you are evaluating a position here. Days like today are enormously useful for teaching, because the emotion in the market reveals exactly where the cognitive errors are concentrated. 3 mistakes beginners make with MSTR, stated plainly. First mistake, confusing correlation with equivalence. MSTR and Bitcoin move together, but they are not the same instrument. Bitcoin is the asset. MSTR is a leveraged, fee-bearing, equity-structured exposure to that asset, with additional layers of dilution risk from ongoing share issuances and debt obligations. When you buy MSTR, you are buying a capital allocation strategy as much as you are buying Bitcoin. If you want pure Bitcoin exposure, a spot Bitcoin ETF is a cleaner instrument. If you want leveraged exposure with additional upside from the accumulation strategy and institutional access dynamics, MSTR is the vehicle. Know which one you actually want before you touch either. Second mistake, sizing based on daily returns without adjusting for volatility. MSTR's annualized volatility in 2026 has run well above 100% at various points. A position that feels manageable when it goes up 12% in a day should feel proportionally uncomfortable when it drops 12% in a day. And it does both. Position sizing in a high volatility instrument needs to reflect that full distribution, not just the upside scenario you are hoping for. Third mistake, treating catalyst days as entry signals without context. Chasing a 12% move because it feels like momentum is one of the oldest and most expensive errors in markets. By the time retail sees the move and acts, the smart money that positioned ahead of the Bitcoin breakout has already captured the majority of the return. The more useful discipline is to build a thesis on the instrument before the move happens, understanding what drives it, at what premium it becomes overvalued, and at what premium it becomes interesting. So that when the catalyst arrives, you already know what you think. That is how you stop reacting and start positioning. So here is where we land. MSTR's 12% move today was not random noise. It was a predictable output of a leveraged Bitcoin structure responding to an underlying asset breakout, and you now have the exact framework to evaluate it every time it happens again. But here's the question this raises for next time. If Bitcoin ETFs are cleaner and cheaper, why does MSTR's premium actually persist? And is there a scenario where that premium permanently disappears? That is the next video. Subscribe so you do not miss it, and drop your MSTR thesis in the comments.